Good evening, everybody. Welcome to the Locke in Your Success Trade and Market Update for October 28th, 2012. If you remember last week, we were saying that the markets were kind of at a support level, but we had a bias to the downside, and we had set a price target on the S&P of 1395 to 1400. If we come in here and take a look at our charts, we can see that we came down to around 1411. Wouldn't be surprised, or I'd actually expect the markets to come down at least to the 1395 area before they reversed. And from that point, we may be looking at a little bit of bullish action, or at least a bit of a bounce before, probably a bounce up to this 1430 level before we return back down again. Let's see here. If we go to the NASDAQ, we had a target on NASDAQ of 2675, which has been exceeded. We're basically sitting here at the 200-day moving average. If the S&P comes down, 1395 isn't that far away from the S&P, so this may actually hold its lows, and we'll have to watch for that. If this really starts crashing down, then we would be looking at the next support level down here at 2550, which would be a fairly large down move. I am not expecting that, though. I expect this to support right in this area here. If we take a look at the Dow, we had a target of 13150 again, which is exceeded. And I believe when we talked about that 13150 target, we were saying, well, we're very close to this this major trend line. I wouldn't be surprised to have it come down and touch that. We're also very close to a moving average support here for the 200-day at 1300, and we wouldn't be too surprised to hit that either. So we have decent support here on the, plus these lows here, these highs from back here in July, as well as these lows from late August. They all tie in with the 1300 level. This is actually, we had a price target that was set from a price topping pattern, but realistically, our support level is a little lower here at the 1300 level or so. So would expect a little bit more down move here. And coming back to the Russell, I had a target of between 805 and 800. We come real close to the 805 number here a couple times. Let's see, we had a low of 807 this day, 807 this day here, also on Friday. So, can we call this bottomed? Well, I still think we come down, touch this moving average. We come just a little bit lower, possibly still come down to 800. From there, that would be kind of an expected move, and from there we'll have to see where the bounce goes. If we bounce up over our new resistance levels and it holds there towards the end of the week, then that would be considered fairly bullish, and all systems are probably going to be go for the bulls at that point. If not, then we're going to continue down. One thing I can say is the RVX, or actually just look at the VIX, it has come up, but it hasn't come up that much. It just to the top of this range where the last time we hit this area, we reversed pretty hard on the VIX, which means the market went up. And again, we have the same thing here, where we're reversing fairly aggressively off of our highs resistance on the VIX here. So the next thing we're looking at is a close up over this 19, and definitely if we start pulling over 20 on the VIX, that might be an indication that we're that we're going back down again. So I could make a case here for a direction either way. I would say with a lack of any news in either direction, the market's going to tend to float a little bit lower and then probably bounce. If we get some really bad news and we start breaking this 800 level here, and if we come back to SPX, we start breaking this 1395 level, we start pulling much under there, then we're probably coming down to our next support level, which is down here to 200 MA. So I'm pretty neutral right now. Slightly lower and then a bounce will most likely be the case for this week. We don't know how the trading is going to be on Monday. I think the exchanges are going to be closed, except for electronic. They're going to be open electronically, but anything that's going to be floor traded, I think, is going to be closed in New York because of this big storm. Okay, let's take a look at the trades. This here is our M3 position for December. The down move has not hurt us at all. We've had, like I said, since we entered, we've had a fairly aggressive down move. It's still about break even. It's up $63. And it's been just kind of plus and minus a few $100 all week. So this trade is doing just fine. We've had to make no adjustments, so there's really not a whole lot to say about it, other than things are going well. Oh, I'm sorry, this is not our trade. This is another trade that my daughter has on, who is almost 16, is now trading with me, and this is her M3 position. Let's put another one in here. Okay, here is the position that we're monitoring on the blog. It's actually not up as much as my daughter's position. She started a little bit earlier than I did in the December cycle, so she had a little bit better entry. So here's our website trade. It's pretty much break even here. And again, it's better than it was. It was down $300 or $400, I think, earlier in the week. All right. Also, and that was the only trade we had on last week until Friday, where I came in and I entered my bearish butterfly trade for December on schedule. I did not post it in the virtual trading floor. I actually had it done automated, and I ended up automatically buying this thing at around 3:30 on Friday. What I did is, and since it was automatically done, I did not get it posted on the virtual trading floor for SMB, but we'll talk about that on Monday. So since Friday was the day we're supposed to enter, here is the position here. I entered Friday afternoon a 850, 800, 750 put butterfly for, let's see what the payment on that was. It was for $14.30, and this is what the position looks like now. Just so you know, I do not like this entry. When the market comes down near a support level, which again, we were talking a support level in here of around 805, 800, and we've been down quite a bit for the last week or so. When it does that, it's not usually the best time to buy it, especially when the volatility is really low. We didn't get a volatility kick. Normally what'll happen is the market will come down, the volatility will kick up, prices will flatten out a little bit on the butterflies, your delta will flatten out a little bit, and if that was the case, I would have been able to run into a 790 put butterfly for entry, and I would have been able to get it relatively inexpensively, around $10 or so, and that did not happen. So therefore our delta theta ratios did not straighten out. I had a delta theta ratio issue at 790. I had to jump to the 800 and pay $14.30 going in. So I do not like the entry, but that being said, we trade this every month by the guidelines, whether we like our entry or not, and it was time to get in. So that's what happened, and here we go. Let the games begin. If we get a good hard up run, it'll be an interesting month for us. If the market as long as it stays in a 60-point range, it should be a very good month. So that's what we got going on. We have entered the December bearish butterfly. November M3 has been closed at our profit, but December M3 is going along quite nicely, and we expect a little bit of more down movement in the markets before we bounce. Maybe not a lot though, just a little bit more, drift downward a little bit, and then a sizable bounce. All right, have a great trading week, everybody. Stay safe from the storm if you live on the east coast of the US, as I do, and I will keep you updated with any changes. Thank you, and have a great week.